In this video, I'm going to share with you the last week's events that have affected the US dollar, stocks, bonds, crypto, gold, and silver. As you may know, on June 12th, Israel started bombing nuclear and military targets in Iran. Everything reacted across the board. The U.S. stock market plunged. The U.S. bond market dived. The value of the U.S. dollar has hit an all-time low, and concerns over the U.S. actively joining the war within the next 2 weeks has destroyed the markets again today. All told, the losses to traditional investments have been over $1.5 trillion and growing as I record this. While gold and silver investors, they've seen their gold and silver values rise, and hence they've gained money while the $1.5 trillion has disappeared. I'm Scott Zuckman, and I want you to strongly, as always, consider gold and silver for your own well-being. Here's some of the facts that I'm going to lay out for you about what has happened in the last week to 10 days. Crypto, in just this time, the overall crypto market, that's including Bitcoin, including altcoins, that has lost over $300 billion in value in just that short time. That's about 10% drop in value, whereas gold has risen over $100 an ounce at the exact same time it shot up when crypto went down. So you compare a 10% crypto loss to a 3% gold gain. And when I say gold, it usually will include silver. But I'm going to say gold for the most part, because long-term wealth has always been held in gold even more than silver, and more speculation has gone into silver because silver rises faster in certain times than gold does. So putting this together, what I said was crypto lost 10% while gold has gone up 3%. That's a difference of 13% to your net worth if you were in crypto versus gold. That is huge. Why is these things happening? It's not just the world macroeconomic trends, which is the vast kickoff of these, but let me just tell you what's been going on for a while here. U.S. Treasury, about 2 weeks ago, just quietly bought $10 billion of their own U.S. bonds. What does that mean? Basically, they used debt to buy the bonds to get out of debt because they had to pay off the bonds. So the expiring bonds were paid with new debt, and it just keeps going. It happened because people all over the world have been getting rid of the U.S. debt, meaning the U.S. 10-year Treasury as the biggest one. And because of this, the U.S. figured they had to prop up the U.S. bond, and they did that by buying $10 billion worth. And that is an all-time record. So while the world was selling off, the U.S. was buying its own debt. And this is a vicious cycle because once you're in it, it's almost impossible to get out of it. And the only way that can happen is down the road with the Fed policy on their interest rate. Right now, they're saying they're going to keep that steady for an unknown period of time throughout 2025. This causes volatility. How has it affected everybody? Well, let's look at the US dollar. The US dollar itself has been dropping in value against world currencies for the last 2 months straight. It's at all-time record low against world currencies. Lows. I mean, what does this do to the US dollar? Basically causing inflation just because it's going down. By inflation, it means it takes more of your devalued dollars to buy something. Because, even if the price of the something didn't change, it takes more of the devalued dollars to buy them. This makes it incredibly difficult for people saving money. Savers, as Robert Kiyosaki, my dear friend and mentor, has said over and over, savers are losers, meaning they're losing money by having just inflation erode the value of the dollar. Also, that's what makes gold and silver go up, ironically, because they're based in the US dollar price. So when the dollar goes down, it takes more of them to buy the gold and silver, hence raising gold and silver prices. When gold and silver prices go up at some point in the future, you convert them back to fiat dollars and you actually get more of them than you put in, which keeps up with inflation and often beats it. Why? Because when the stock markets go down, when crypto goes down, as crypto has been, as the stock market has been, and I'm going to use S&P 500 to represent the general stock market. When those go down, gold and silver go up. When gold and silver go up, you can always transfer it back into fiat dollars and you get more of them than you put in. That's an increase in wealth, and it usually equals or exceeds inflation. When confidence in the stock market, the S&P 500, the Dow, NASDAQ, when that goes down, guess what happens? Gold goes up. And that's what's been happening across the board. That's why there's a 13% difference between what you would have made in just the last week to 10 days on gold versus crypto. But now let's look at, because of the dollar being at an all-time low, Bitcoin plummeted too with this bad news. It was about 111 right before the news of the bombings came out. Someone got word of this. The crypto market started dropping rapidly. Bitcoin started dropping rapidly just before the news of the bombing came out. Let's see, Bitcoin went all the way from about $111 down just under $100,000 briefly. And now it's settled for just $103,000. It's still way down. It lost about 10% of its value. At that same time, when gold raised 100, that is the 3% difference. And that's why you have 13 between the two. Let's look at year-to-date gold versus the stock market. Year-to-date, from January to mid-June, you're looking at gold being up 30%. That's right, 30% in half a year. That's equal to a 60% a year appreciation in price. Leaving your cash in the bank is suicide because it can't keep up with that. But guess what? What has happened to the S&P in the first 6 months? Year to date, the S&P is down 12.3%. That's right, down. The difference between the two is 42.3%. And that's equal, if that were to continue all year, that's over 84% change. Imagine having your money in the S&P versus gold. You'd be just scratching your head and you go, what am I doing? Why is this happening? But yet, you might be thinking, oh, okay, Scott, that's just because it's short term. That's just because this happened. It'll change later. Well, number one, 6 months is not that short. But what about the last 10 years? Let's go back 10 years. The price of gold going up has beaten the S&P 500 by not 100%, not 200%, but 300%. What does that mean? If you had $1,000 sitting in the S&P, whatever it went up to, it would have gone up 3 times more if you had it in gold. And that's over the last 10 years. And now let's go back 25 years. If you go back 25 years and had your money in gold, it would have outperformed the S&P to date over the last 25 years. Well, this is a pretty darn good case for gold, don't you think? People ask me all the time, what's the ratio I should have of gold to silver? Well, that depends on personal preference. I say the longer you're going to keep your money in gold, and I'm talking physical gold here, and if you don't know how to get physical gold, hang on with me because I'm going to offer you a way to get it at no commissions, no fees, and just barely over spot price. The best you can get out there. If you ever want to sell it, you can sell it back to the same people for 2% guaranteed over spot with no fees and no commissions. This is by far and away the best way to go. I'll tell you about this before we end the video. But going back to what I was saying, if you think that's something, Trump Social, he said and he hinted that he was thinking about getting the Treasury to reevaluate our U.S. reserves of gold. Why should you reevaluate it? Or maybe I should say more accurately, revalue it, both evaluate and value. And why do you do this? Well, because currently the U.S. Treasury of gold reserves is priced at $4.22 cents an ounce. Today, gold's about $3,400 an ounce. Oh my goodness, that's just craziness. And they're doing it because on the balance sheets, it makes the U.S. look a little better to keep the price down on the reserves. But if they do revalue that gold, the current reserves at $4.22 equal about $11 billion. Because if they revalue gold at today's value, that will take it close to $500 billion. And that could go a long way to paying off our current debt. Economically speaking, it makes a lot of sense, but there's another reason to do it. If the reevaluation happens, the people, all people from around the world are going to see all this extra gold and value sitting in the U.S. Treasury reserves. So what they're going to do is worldwide governments, other central banks are going to start buying gold like crazy. Even the U.S. will start buying more because that keeps the price up and going up. Everybody else will say, I need to get in on this. You know, you've heard of fear of missing out, FOMO. And guess what? That alone will cause the price to go up and up and up. And when gold goes up, granted, it could come down short term, but as I've shown you over the last 25 years, long term, it goes up. So if you're younger and you want to hold more value, gold is the idea. If you're older, if you're in retirement age, you would rather have safety over speculation. And to keep things safe, what would be better than having a bunch of physical gold that you could trade for fiat anytime you need to pay any expenses or something? You're going to have something that lasts through your retirement. In fact, it'll be there for your family. When I say retirement, people often think, am I talking about retirement accounts? Or are you talking about just having gold in a safe? And the answer is both. You can do both. Here's the benefit of it. And this is why I'm so pro gold versus crypto, for example, is because what we've found is that there is a gold-backed IRA that you can put physical gold into in the form of U.S. Eagles, bullion, gold bullion. Now, here's a beauty of that. You can have it in all forms. You can have an IRA, 401k, you could have physical gold, and now you can delve with your financial planner into the tax benefits of that. I'm not going to go into that, but there are many. I've given you all the facts. I've told you what's been happening to the dollar, to bonds. The bonds are at like all-time lows. You're talking that there's fear running in the streets. The U.S. might get involved in this war in the next 2 weeks. All told, this is a great reason to get into gold. Now, if you would like some help with getting into gold, I want to tell you a couple things. Number one, at the bottom of this page, you will see a link where you can get on my calendar and have a free 30-minute consultation with me where I can fill you in on more of the stuff that I know. But what I really know is the sources I've been using to get the lowest prices on gold and silver, not only bullion, but also collectibles. And a lot of people are into that for leverage. But you also have not just the best prices, it's called dealer direct pricing, because we buy this company hundreds of millions of dollars. I don't personally buy, but the company does. And they get the best prices that the mints give out. So we call that dealer direct pricing. And they don't mark it up like crazy. As I've said in many other videos, regular coin dealers, brokers, shops, and things like that, they will not only take spot price and add a percentage above it, typically 3 to 6%. And then they'll add a set fee over that, which could be up to 1%. And so you're paying much higher than the spot price, which means gold has to go up for you to break even. Well, I don't like that. So I want to pay the no fees, no commission, and I want to have it stored securely in 24-hour maximum storage with what we call a private vault. There are two kinds of vaults, private and non-private. In the non-private, places like the government, IRS, and things like that can seize your assets in a non-private vault. Non-private also includes your own home if it happens to be sitting there, okay? And they've given you notice. But a private vault doesn't fall under the same rules, and it's totally private. There's no reporting to the government other than what you report. And even when you do, there's no way they can get to it because it's in a private storage facility. There's maximum security. It also has insurance, and so it's insured. Lastly, storage fees. Once you start gaining more and more metals, then you can get up to $50,000 of your metals stored absolutely free, and that will save you hundreds, if not thousands of dollars per year based on other storage facility. There's just nothing better. So if you want to acquire gold at the best prices, you want to keep it secure, I will only tell you this if you book an appointment with me on my link below this page. If I've given you any value today, please hit the like button, hit the bell, and subscribe. Thank you very much for listening, and I look forward to talking to you on the next video.